A couple of years into building Squad, we started seeing how our customers actually use the product. And we realized that a lot of them use multisig as the de facto business banking solution, right? And at first, we actually tried to figure out how to develop more of these kind of more traditional financial workflows, like on top of multisig itself, right? But pretty quickly, we discovered that these are very different customer personas, right? Like when you're a multisig user, they're much more engineering aware, right? Like it's usually a CTO or a CEO who kind of understands how to manage, hardware wallet, who thinks a lot about security, versus somebody who is just, looking to do payroll or earn yield on capital and just doing kind of regular, payments and paying vendors and contractors. I would say we pretty quickly discovered that those are, those workflows require separate products because they address different personas from a customer perspective. And so that's kind of the origin story of Altitude.
Welcome to the Accountant Quits podcast, where we help accounting and finance professionals learn how to manage a business using crypto. Stepan Simkin is the co-founder and CEO of Squads Protocol, the gold standard for multisig wallets on Solana, securing over $15 billion in value. Stepan also launched Fuse, a finance app built on crypto rails for individuals, and Grid, a stablecoin API infrastructure for accounts, payments, cards, and yield. In 2025, he launched Altitude, a new global financial account for enterprises. Altitude is a stablecoin-native financial platform combining ACH and wire payments, treasury yield, and AR and AP workflows designed to give companies global access without needing a traditional bank account. And in this episode, Stepan will even provide you with a demo of Altitude. Today with Stepan, we'll unpack building Squads and Altitude, why stablecoin adoption has accelerated, the modern CFO stack built on stablecoin rails, privacy and payments, agentic workflows, and much more. And before we dive in, a quick note about the Accountant Quits community platform for Web3 accounting and finance professionals. Inside the platform, you can connect with peers working in Web3, join focused chat groups, access job opportunities, and attend practical workshops on Web3 finance. You can join for free by heading to theaccountantquits.com/courses and selecting free membership. The link is also in the show notes. Lastly, if you're new to this channel, make sure to like this video and subscribe. It really helps the channel to grow and spread our message to more finance professionals. Now let's get into my conversation with Stepan. Stepan, welcome and thanks for making the time to be here.
Thanks so much for having me. I'm excited to be here.
To start, can you share your background, how you became interested with blockchains a few years ago now, and maybe the origin story of founding Squads?
Sure. Before getting into crypto, I used to do corporate M&A, structuring large M&A transactions, mostly on the corporate side. And then when I was at Clifford Chance, which was it's a big English law firm, around 2017, Bitcoin was doing its thing. And a lot of clients of Clifford Chance were asking, is Bitcoin legal? Can we invest? How do we mine it? And I was in charge of essentially writing a bunch of memos and explaining what you can actually do with it from a legal perspective. That was my kind of first introduction. And then about sometime in late 2020, I learned about Solana and got really excited about the vision and the idea of solving scalability and performance, allowing us as builders to focus on product experiences and actually building a business. And around the same time, Solana decided to launch a hackathon, and I felt the calling and decided to jump in full time. And so from there, basically, we were able to put together a small team by the end of the summer of 21, raise a bit of money, and then go and execute on a vision, which at the time was building full stack governance infrastructure for Solana. And the first kind of core thing we wanted to focus on, the core primitive, was multisig. And so we decided to go and perfect that first. And we ended up never building out the rest of the stack and actually built the multisig and got it to a place where it became the standard for the ecosystem. And then kind of realized that using the same infrastructure that we built and the security posture that we developed for securing digital assets in a more crypto-native way can be applied to essentially build a financial services company, helping businesses to run their financial operations entirely on this new stack. And so this is where we are today.
Perfect. I'd like to start our conversation with a general state of stablecoin adoption. So The stablecoin market crossed 300 billion last year, up from 200 billion from the start of 2025. We're now seeing legacy players like Stripe, Visa, PayPal, of course, they've got their stablecoin. And also Western Union announced last year they're launching their stablecoin actually on Solana. So stablecoins is of course interesting because it signals real usage rather than just speculation. So from your vantage point, what do you feel has changed, maybe technically, regulatory, of course, like in the US, or maybe also behaviorally with the end users that makes stablecoin feel inevitable today as a core financial infrastructure?
I would say all those three things are important, right? And so there's definitely, I think it all started with there was a sort of technological shift, right? I think when we started the company in 21, I think we just caught the tail end of a time when Circle allowed to do third-party payouts, right? So you could essentially do USDC to somebody else's bank account. I think Circle kind of shut down that capability around like late 21. And being able to do that, being able to do stablecoin third-party payouts into different bank accounts is a prerequisite to really building any kind of financial services business on top of stablecoin rails. And so around 2023, we started seeing other companies try to replicate that and actually build infrastructure around that. And so Bridge was actually one of those companies. And they decided to kind of do this early and then started a movement, what we call today orchestration. And then obviously the Stripe acquisition helped making it a lot more prominent. So I would say there's definitely been advancements on the technological side, right? Like we now have a lot of these money movement APIs that allow you to go from fiat to stablecoin and back. So that is definitely a huge driver. Same kind of bucket I would put the stablecoin backed card, right? Like the idea that you can launch cards that are linked to stablecoin balances. Again, that is a prerequisite for everything we're seeing today. From a regulatory perspective, obviously, there's with kind of new administration in the US, everybody's more comfortable to experiment and try new technologies, whether it's AI or stablecoins. And I think we're seeing a lot more enterprises, a lot more, both on the infrastructure side and provider side, like PSPs are much more eager to try things. And then obviously on the customer side, there's more customers feel much more free to see what are the solutions out there, right? From a technology perspective that can unlock better cost structures for them and give them better user experience. I would say that is also a huge factor. And then I think we're gradually compounding in terms of crypto adoption more broadly, the world being more comfortable with crypto. There's UX improvements that happen, right? Like I think wallet as a service today is much more prominent than it was a couple of years ago. And the idea that I can have all kinds of authentication, whether I can have a wallet that's connected to my WhatsApp account, connected to my email, connected to my phone number, whatever it is, you can now really have a lot more flexibility. And I think that is also a huge component. So companies like obviously Privy, Turnkey, Dynamic, there's many in the space. I think they also definitely helped in moving this forward. And then I would say the one more thing is like general like robustness of blockchains, right? Like I think blockchains are performing much better. We do have abundance of block space. I'd say from a security perspective, also, if you look at previous cycles, you had majority of hacks would actually be smart contract hacks, right? Now, majority of attacks are actually social engineering. They're attacks on the kind of upper layers in the stack because smart contracts are becoming more robust and resilient. And so I would say all those factors combined got us to where we are today.
Perfect. Now, for the listener, I forgot to mention this earlier, but today's a special episode because towards the end of the episode, Stepan will actually be showing us a demo of Altitude. And if you're listening on Apple Podcasts, it's probably best to switch to either Spotify or YouTube. Now, moving to Squads and Altitude. So you first started with Squads, and it's a multisig to manage assets on Solana. Similar to Safe or EVM chains, Squads is basically the equivalent household name on Solana. If people are unfamiliar with the term multisig, I just want to quickly explain what that means. An externally owned account or an EOA wallet, like let's say MetaMask, which you might be using personally, isn't really suited for organizations, right? That's because it relies on a single private key to execute transactions. So if you were to lose or if that key got compromised, basically your funds are gone. Now, a multisig, short for multi-signature wallet, it solves that problem by requiring multiple private keys to authorize a transaction. Think of it, it's similar to a company's bank account where you need multiple bank signatories before a transfer is approved, right? Now, I was seeing that on your website, Squads has over 15 billion in TVL, and the focus of our conversation today is more on Altitude, the new product that Squads has built. So Altitude is a global financial account for businesses. It's built on stablecoin rails on Solana, and it provides payments, yields, cards, and I believe also AR and AP, which Stepan will show us a little bit later. So it is a modern CFO stack and built with stable coins at its core. How did this experience building Squads lead to Altitude?
Great question. Originally, multisig was and still is a very both crypto native and institutional facing product. Like you have to know what you're doing, right? And when we started, it was also a very developer facing product and still is. Like majority of Solana programs, a lot of Solana validators are upgraded through our multisig infrastructure. And obviously, treasury workflows were always paramount. Like when you launch a token, you would put a lot of the supply into the multisig. You would then do a lot of financial operations with your own token, or you would raise some capital in stablecoins that would also go into multisig. And so we always facilitate a lot of those capabilities on the multisig side. And I would say a couple of years into building Squads, we started seeing how our customers actually use the product. And we realized that a lot of them use multisig as the de facto business banking solution, right? And at first, we actually tried to figure out how to develop more of these kind of more traditional financial workflows in like on top of multisig itself, right? Like and try to integrate them into the single product. But pretty quickly, we discovered that these are very different customer personas, right? Like when you're a multisig user is they're much more engineering aware, right? Like it's usually a CTO or a CEO who understands how to manage hardware wallet, who thinks a lot about security, who like for whom all the workflows that we developed, whether it's program management, validator management, or like complex DeFi interactions, are valuable and very much understandable, versus somebody who is just looking to do payroll or earn yield on capital while in between payroll cycles. And I would say, and just doing regular payments and paying vendors and contractors, I would say we pretty quickly discovered that those are workflows require separate products because they address different personas from a customer perspective. And that's kind of the origin story of Altitude. I would say we also saw just like as we had more capabilities unlocked on the stablecoin side, we realized that when you combine the scalability and performance of Solana, the security and programmability of Squad's protocol, and you essentially add all the infrastructure providers that we work with today, be it from vault as a service, from orchestration, you can really kind of rethink what does the stack for building a financial services company look like in today's world. And that was really exciting and still is a very exciting opportunity for us. And we also really like the idea of owning the stack, right? That's what the Squad's background allows us to do. So we own everything from protocol to API to the product layer, right? And I think from that perspective, that gives us a lot of flexibility and also gives us a lot more certainty when we're onboarding customers into essentially a self-custodial system, making sure that their assets are safe, as opposed to us relying on third-party providers for some of the very core workflows.
Now, the other topic I want to touch on, Stepan, is on providing operators with global access. So you have these leading fintech tools like Mercury, Brex, or Ramp. These are US first companies or solutions, meaning they primarily serve US incorporated companies, right? A non US founder, they can use those solutions, they can get onboarded, but only if they incorporate in the US. Altitude is available right now in 150 plus countries, including the US, Canada, Europe, Australia, UAE, India. Altitude is not a bank, right? So it doesn't custody funds, but it leverages on Squad's permissionless multisig infrastructure, and then you build the financial operations layer on top. My question is, how does that architecture, being self-custodial and protocol-based rather than bank-based, change access for founders and operators outside the US?
Yes, I would say that is, if you think about the spectrum of different providers who are offering financial services to businesses, right? You can start from, there's banks that are oldest and the slowest. Then you've got the fintech kind of 1.0, that's Stripe and Ramp and Brex would count towards that bucket. Then you have newer fintechs that are much more willing to play ball with stablecoins, like Now is a good example from New York. And then you've got sort of us, right? Where the way we're different to all the other guys is that all of them are fiat first and then stablecoin compatible, right? We are stablecoin first and fiat compatible. So what that means, as you mentioned, the assets are not custodied in a bank, right? They're actually held in a self-custodial wallet that you create when you onboard to the platform. So that allows us to technically be global from day one, right? Like we can be available in a lot of places at the same time. This doesn't mean that we're able to fully service those markets, right? Because there's a lot of different fiat connectivity issues that we need to solve. If you want to do local payouts in a specific country, there's still infrastructure work that's required. But that really flips the model for us, right? Like where when we think about expanding to other markets, we're not thinking about, oh, which banking partner should we get? Should we get licensed in this jurisdiction? Kind of flips, right? Like we can see, okay, we see a lot of demand from this geography. Let's go there. Let's start onboarding customers. And then over time, kind of develop deeper fiat connectivity, right? And so I think that really allows us to go global much quicker. That becomes the downside of that approach, which is also in many ways an opportunity that we're solving, right? It's like, how can you build trust in this kind of system? Because in the US, when you're onboarding to all these providers, like it's just FDIC, right? And so you trust that the government will bail you out in case something goes wrong. That said, though, there were cases, right, where like even in a kind of in fintech layers, right, you can get lost in reconciliation hell, which happened with the signups, right? And still people, I think, can't account for, I think, 90 million in lost funds. So the traditional fintech system is not perfect either. But I would say from a trust perspective, when you think about self-custody, we're very committed to actually cracking that problem. You will trust your self-custodial formally verified account on chain more than actually trusting bank accounts that is even FDIC insured, just because, again, the only reason you need FDIC is because you don't trust the banks because the money isn't there, right? Because of fractional reserve. And like when you actually deposit your capital, it gets reused for a lot of different things and it's not actually there, which is very different when you're obviously doing it with self-custodial wallets because the money is actually always there. You can see it on chain.
Before we continue, let's take a quick commercial break from our sponsor. If you're serious about running your business using crypto, you need tools built for crypto. One of my favorite apps, and yes, one that I use multiple times a month, is Request Finance. This app has been a game changer in how I invoice my clients and receive stablecoins and crypto directly in my wallet. But hey, there's so much more to it. Request Finance is the all-in-one platform for crypto operations. Accounts payable, accounts receivable, expenses, and even accounting. Plus, they've got a killer multi-pay off-ramp to over 190 countries, meaning you can pay someone with crypto and they get fiat in their bank account. Request Finance connects to over 20 blockchain networks, including Ethereum, Solana, Base, Arbitrum, Near, and more. Here are some features that I love. Batch payments using your preferred wallet of choice, a single dashboard to track all invoices with real-time updates. All invoices contain the transaction hash for easy audits. But hey, don't take my word for it. Try it out for yourself. Head over to requestfinance/partners/theaccountantquits and get 2 months for free with all the pro account features. Join 3,000 finance leaders today using Request Finance and make crypto operations simpler, compliant, and less stressful. So what are you seeing right now? Do these companies actually still need a bank account? And we'll go through Altitude later as well. We'll show the platform. But in terms of onboarding, companies are able to make payments from stablecoins to fiat, right? And you would be taking care of the off-ramping.
Correct. So when you onboard to Altitude, you create an account, you're able to add different team members and you can set up different access controls and permissions. And then from there, all your balances are held in stablecoins, right? So for dollars, we use USDC. For euros, we use EURC. In the app, this just looks like dollars and euros. And then you're able to obviously transact in stablecoins if you want to pay a vendor using USDC, or you can send an ACH payment, you can send a domestic wire payment, a SEPA payment, in euros, or soon we're launching Swift in case you do want to go the Swift route and wait for 3 or 4 days and pay sort of a higher fee. Yeah, and for you from a user experience perspective, like it's seamless. For you just see your dollar and Altitude account being off-ramped to somebody else's bank account, for example, via ACH. And obviously we are facilitating all the behind the scenes work to make it feel like it's just dollars moving either into a stablecoin wallet or into somebody else's bank account or your own.
Yeah, I really like the fact that all these SEPA ACH transfers now are built from a self-custodial solution. Like these new banks, the Mercuries of the world, or now Meow, you mentioned Dakota, like would they even need to use those solutions or just leverage like a multisig solution like Scots and then use like Altitude?
So I think Dakota is very much in our bucket, right? Like where they are stablecoin first and they're connected to fiat, right? I would say for everybody else, what we're seeing, like there's Meow, there's Slash, there's other providers. Even I think Brex announced last year that they're going to do stablecoin top-ups, right? I think that's kind of where That's the extent, for the most part, that's how they're touching stablecoins. They're saying, if you want to fund your account on stablecoins, or if you want to do a payout in stablecoins, we'll facilitate that. I think, which makes sense from their perspective, but like the way we see the opportunity, right, is when essentially the account that holds the user assets is disconnected from the bank and it actually becomes a programmable account on chain. You're able to do things that you just are unable to program on top of a bank account, right? And so when we're thinking about agentic workflows, when we're thinking about deeper sort of programmability and automations that you would want to configure around your bank account or around your account where you store your corporate treasury, obviously unlock is massive, right? And so I would say I would love to see more of these players actually move on chain, right? And say, actually, you know what, we don't need FDIC insured accounts as a backend, right, to deliver our services. But so far, that hasn't been the trend, right? And that is also the trend on their side that anchors them to the US, right? Because it's very hard for you to say we're available globally and open bank accounts in the US, right, for companies all over the world, be it India, Hong Kong, Singapore, whatever. I would say the wallet model, right, the on-chain model is infinitely more scalable because you can onboard whole world. So as long as you're able to guarantee from a sort of trust and security perspective that the money is always going to be there, you're just obviously going to have a lot more connectivity to more markets.
Perfect. I want to move on to speak a bit about yield. So we've talked about adoption. Now, the operator's reality is that, and I speak to a lot of these finance professionals, that they are sitting on large stablecoin treasuries, USDC, USDT. A lot of times they're not deploying them. It's not because they don't want additional yield on these stablecoins, but once you move beyond simple custody, you introduce smart contract risk, counterparty risk, liquidity risk. A lot of these Web3 teams, they don't have a formal risk framework built internally to evaluate those trade-offs. Now, in Altshoot, users can earn yield on stablecoin balances backed one-to-one by short-term US treasuries. This is being managed by BlackRock. This is what I want to unpack for this episode. How do you use stablecoin rails and offer yield without forcing these teams to deal with all those on-chain complexities? And maybe what are you abstracting away from the US user experience?
It's a great question. The current offering with Altitude Rewards is really, it's a simple model where when you onboard to Altitude, you have to KYB, right? And then Bridge actually facilitates this functionality for us. What happens is you send USDC to Bridge. There's a stablecoin that gets minted just to really track how much you have actually deposited. They off-ramp your USDC, then go and buy a bunch of treasuries and custody them at BlackRock. And the benefit of this approach, if you buy USDC on Uniswap or on Jupiter or even on Coinbase, you essentially bought USDC on the secondary market and you don't have any legal relationship to Circle, right? There's no legal recourse. You have to them as the issuer because somebody else minted that USDC before you and then put it on those markets, which is very different in our case. If you go and deposit into Altitude Rewards, you're directly interfacing with Bridge and Stripe, right? And they are your counterparty. They're minting that essentially stablecoin for you. And so that gives you actually a lot more guarantees than simply holding USDC in a wallet, right? And so from a CFO perspective, thinking about risk perspective, like that is definitely a great value add. I would say the way we think about the earn kind of more broadly is that you essentially have the kind of the default treasury rates, treasury rewards structure that will always exist. And I think it's becoming much more of the norm, right, to facilitate that happening on chain. But the US treasury rate is going to go up and down. There's always going to be volatility. And at a certain point, we do expect that corporate treasuries will start looking for other opportunities, right? Like how to earn yield on their capital in a sustainable way. And then you're kind of looking at either DeFi or RWAs, right? And again, we're seeing a great renaissance right now where those are also intermixed, right? Like on Solana, Camino is working a lot with Figure. They're working with Onray, right? Which is like Onray is like a reinsurance protocol that all the yield is basically off chain. Same goes for Figure, right? Which is the real estate yield. And so I would say we are going to be exploring alternative yield sources as well, right? On top of Altitude Rewards, where yes, there's going to be like it's definitely going to be positioned as a medium or a higher risk option than just purely going into rewards. But I would say we're seeing more operators become comfortable with that type of allocation, right? And I guess also mentioning here, we do allow an altitude for you to allocate to Bitcoin, right? And like we are seeing some demand from corporate treasury saying, actually, you know what, like 1% of our corporate treasury, we just want to keep in Bitcoin, right? That is their way of diversifying and thinking about risk. So that is also happening, less so with other tokens, but with Bitcoin specifically, I would say it's earned its place as a potential kind of hedge and diversification asset, even for corporate treasuries. Less so for startups, but for like larger players, we're seeing that demand for sure.
Yeah, I think it would be a great user experience for the user to have different yield options, but to also kind of see like a credit score or risk score on different DeFi platforms or different products. Like you can deploy into Morpho and internally, like when we speak to these finance professionals, this is a bit where they struggle with, like to assess like the underlying of that specific role, for example, and how to go about in terms of the risk that the organization wants to undertake. Now, maybe one of the follow-up questions I have is from a CFO's perspective, what do you think or what due diligence should be done before they deploy their treasury funds through a platform like Orchard? You said that right now it's only through BlackRock, and I believe that's at the discretion of Bridge. Like, why it's only BlackRock as well?
That's just how that's how Bridge and Stripe work, right? That's how their stablecoin infrastructure is designed. I would say when you're thinking about evaluating overall, like going into a platform like this, first thing you have to look at is what stablecoin is used behind the scenes, right? That's your issuer risk. I would say we are very comfortable with Circle, and like we hold our corporate balances in USDC, and our customers are happy as well. There's also like great preference for USDT among specific customers, and like that's for you to evaluate whether which issuer to rely on. But that's the first thing you have to look at. I think in any event, you're going to be looking at sort of the smart contract risk, either if you're touching DeFi for sure, but even if not, like if it's a wallet infrastructure, if it's a programmable wallet, if it's a smart account, you have to understand, like, is this protocol immutable? Is this formally verified? How many audits did it undergo, right? So I think all those things, same things apply when you're evaluating what to do in on-chain with your personal wallet. Like those are the same evaluations that you should take a look at there. And then what I mentioned in the earlier part of the conversation, like the risk is moving up the stack, right, from smart contracts to other layers. And so we are seeing a lot more crypto companies, DeFi protocols starting to become SOC 2 certified. And that is also, it's not a solution to all problems, but it's a good start, right? If you're able to pass the certification, I think looking for all those signals makes sense. And then being able to, that's how you underwrite risk in this case. But I guess the benefit here is once you do get comfortable with a model, there's great certainty, right, in terms of how it all works. And there's a lot less surprises as opposed to when you're using like a more opaque system, right, where like in a bank you actually don't know where your money is, and trying to project, right, what's going to happen to a specific bank and how does their balance sheet look like is actually harder than evaluating from a technical perspective. Is this protocol secure, right? Like how does this custody architecture actually work?
Now, I have a question on using autonomous agents, but I think I'll ask you this question if we have time after the demo, because I think it would make more sense for the listener after the demo. So I want to move on to a topic on privacy. So the premise of public blockchains like Ethereum, Solana, and many others are obviously the transactions are public, it's viewable by anyone on the block explorer. But if stablecoins are to become real financial infrastructure, privacy cannot be optional, right? So we're seeing alternative approaches like the Canton network. They take a permission privacy first architecture for mostly for institutional finance players. There's an article that you wrote on X, and I'm going to share this article in the show notes. You talk about selective disclosure, the ability to prove what needs to be proven without revealing everything else. You mentioned that this technology exists, but it's not battle tested yet. Can you unpack that and maybe share what selective disclosure would look like in practice for a finance team?
Yeah, so I would say when you think about privacy, like privacy is just too broad of a concept, right? Like you have to kind of separate it into, you want confidentiality, you want anonymity, right? Like confidentiality implies that you understand the parties that are transacting, but you don't know the amounts. And anonymity means you don't know who's transacting, and therefore you don't know, even though you can't really match the amounts as well. So I would say where we're kind of, I think, landing on as an industry is really that confidentiality is the way to go, at least for the foreseeable future. The way I think about the space, right, is like you have different kinds of solutions, right? Like you've got the more on-chain native ones where it's some kind of like a program that runs on chain. There's a sort of ZK proofs for coming in and out of the program. There's completely off-chain systems, right? Where there's MTC networks that are they're using ZK proofs as well. I'm not a privacy engineer or security researcher in that sense, but I would say what we have discovered is like we spend a lot of time battle testing Squad, the protocol, right? Making it formally verified, auditing it many times, making most versions of it immutable over time as well. And when we think about privacy, majority of the solutions today basically require us to say, if you want to shield a certain balance and allow your customer to transact confidentially, you have to take the assets of that customer out of Squad's protocol and move it into this new program, right, that has a giant code base that is impossible to formally verify, that has a lot of brand new cryptography. And you have to trust that system if you want confidentiality, right? And so today, that trade-off is not great for us, because the reason our customers trust the infrastructure is because of the security posture we've built up. And asking to sacrifice that for the sake of privacy and confidentiality is not great trade-off. Like, you really need to solve for both. And I do think that it's incredibly paramount. Like, I can't fully talk about it publicly yet. We do have our own solution for this. And I would say there's different kind of grades of how far you can go with privacy or confidentiality. We're going to kind of land somewhere in the good middle on the spectrum, basically allowing our customers to have confidential balances, right? Or have specific confidential sub accounts. And I'll talk more about later how we're achieving that. But we do think that this is incredibly important for the space. I do think solving it, I wouldn't build a separate blockchain for this, right? I think figuring out a way to solve it on a general purpose chain is the way to go. And then also over time, we will see a lot more of these solutions get more battle tested, right? Earn trust of the security community or their customers. And so I'm sure we'll have more options. I just think it's not like the point I made in the article. There's a lot of great tech and a lot of it is promising, but we have to scrutinize the security here more, because privacy is not just about functionality, right? It's not just about can you conceal this balance, right, or this transaction? It's actually about can you conceal it, but also in a way that doesn't require me to trust a brand new smart contract where I can lose a lot of my funds.
So you're saying that there is a privacy solution already existing on Solana today, right, where transactions could be sent which would not be publicly viewable?
There's a lot of solutions. So you've got Light Protocol that are doing the more on-chain native way. So they are building different on-chain programs with ZK proofs that allow you, yes, to conceal balances. You've got RKM, which is doing it more from they built their own network and they're using NPC to do that. You've got younger teams that are doing it from different perspectives, like Vanish Trade, they're actually doing it in a kind of smart way where there's just a wallet network and they're just obfuscating your amounts because you basically spin up like a fresh wallet every time you're transacting, right? So there's different approaches, right? It's like you just have to choose the one that you're most comfortable with as a team and then go and figure out how to internalize it in the product. Solana Foundation themselves also built a confidential token standard, right? That's baked into token 22, right? And so there's different solutions. It's just the question of which one can you underwrite from a risk perspective, to the point that we talked about before.
Perfect. Stepan, I'm looking at the time. I know we don't have that much time left, and I really want to show the listeners what Altshuit looks like. So, because most of our audience and listeners are already working at Web3 companies, a lot of them are using multisigs like squads. They might just not have heard of Altshuit yet. So, I mentioned this earlier, but if you're open to it, can you now maybe share your screen and walk us through the platform from a finance operator's perspective?
Absolutely. Let me just share my screen. All right, so here's my demo account. So we're going to run through all the core functionality quickly here. We have the approvals page where you get to approve or reject transactions that get queued up. And then if the threshold for approvals has been met, you get to execute the transaction and the payment goes out. This is the treasury page where you have dollar accounts and euro accounts. You can do traditional bank transfers through ACH, SEPA, and Wire, or do stablecoin transfers on chain. You can also transfer funds between accounts. So for example, you can do transfer between a dollar account or a euro account. Here's $100. You have automated on-chain FX. So this is actually a swap between USDC and USD done through Jupyter. So here you can see your euro account denominated in euros. This is the inflows and outflows page, which is more accounting friendly, allows you to do exports in PDFs or CSV. CSV obviously great for then syncing things with QuickBooks, particularly useful for the accountant. This is the earn page where you can earn rewards on your dollars. It's powered by infrastructure from Bridge and Stripe, and it's backed by short-term US Treasuries managed by BlackRock. We have the holdings page where you can buy and hold Solana or Bitcoin. You have the bill pay page, which actually it's a new feature that we just launched last week. It allows you to upload an invoice that you receive, and there's also, you can do it manually by just dragging and dropping it here, or you have this sort of the email that you can send invoices to, and then they get automatically uploaded into your Altitude bill pay page. Then it gets scanned automatically and kind of matches if you have a recipient already saved, that matches the one on the invoice then it matches automatically and allows you to then just initiate the transaction, and once it's approved and executed, the payment goes out. We have the settings page here where you can configure the threshold, add additional 2FA security, and kind of manage your own bank accounts that you can add once you actually complete the KYB. You have the members page here where you can add different members and set different permissions and parameters in terms of who and how can interact with the account. You have the recipients page where you can see all the recipients and add sort of more contacts. Here you can also contact support, and then we have the help center. So this is the L2 demo. And then I think that's it for now, right? I think we kind of went through all the major functionality. We are launching corporate cards very soon, and that is probably coming later next month. And then there's a lot more kind of like bill pay is just the beginning, right, of our journey into kind of building out this CFO suite around Altitude. So invoicing is coming, kind of deeper accounting workflows are coming as well. And so, yeah, the platform is evolving and we're developing a lot of features at the same time. And there's also, kind of a lot of exciting things I can't really talk about publicly yet.
A question I have, so are the squads features available here, like the multisig features available in Altitude, or you still have to use squads separately for that?
So the separation is basically if you're dealing with stablecoins, right, and you're running essentially a stablecoin treasury, you go to Altitude, right? And here you can configure, again, it's a similar setup where you can configure the threshold, you can add different signers, you can also add passkeys for 2FA per signer. So all those capabilities are here. But obviously, if you want to do advanced on-chain workflows like managing programs, validators, tokens, and interacting with DeFi, all of that is for squads, right? So if this is for the CFO, right, squads is for the CTO. That's probably the way to think about it.
So if you have funds sitting in a multi-sig on squads, you can just come here and do outflows and receive the funds on your squad multi-sig here.
So workflow that we see, right, like you're a team that has 100 million of stablecoins, right, sitting in squads. You would transfer 20 or 15 or 10 into your Altitude account and then run your financial operations through Altitude, while multisig you use essentially as a deeper treasury solution, as a cold storage solution.
Okay, I understand. Perfect. That's a great demo. Did you want to show us anything else, or maybe that's it?
No, I think from a demo perspective, we're in a good place.
Perfect. And is there any onboarding requirements to Altitude? How does that look like?
Yeah, so from an onboarding perspective, you can create an account without passing KYB, right? So if you want to access purely the on-chain features, so you can create a wallet, you can accept stablecoins, you can send stablecoins, you can configure signers and all those parameters. But obviously, if you want to access fiat payments, ACH, SEPA wire, you're going to have to KYB. And obviously, all that same process will unlock for you all the capabilities around corporate cards and all the future features we're launching around payment and money workflows.
Perfect. You just mentioned workflows. That was a question that I had. Maybe you can give us a teaser of what's upcoming, and how can these finance team create some automation workflows using Altitude in the near future?
Yeah, so right now we're really setting up this foundation, right? Because it's really, the very core is you create an account where you can hold your balance, you can earn yield on that balance, you can spend it, right? So that's why corporate cards are important, and then you're obviously able to transact and make payments. So that is really the core. On top of that, you have the CFO suite, right? So that's essentially workflows that we're building into the app on top of the core. So that includes bill pay, that includes invoicing, that includes accounting. And then on top of that, the next phase will be creating deeper automations, right? Allowing you to essentially do a lot less, right, from an operator perspective. So what that means, for example, because we're using on-chain policies, right, we can say that these certain, like the 3 recipients here are whitelisted. And so if they are sending you an invoice to your email inbox and the name matches, the same details are like the same address that you usually send them to matches in the invoice, you can have an agent automatically initiate the transaction for you to approve, and then you will execute, or you can have an agent actually do the payment end to end. If you're comfortable, I would say that will get to at later stages. But when you think about why build a fintech on top of stablecoins and blockchains, that is one of the very good reasons, right? Because when you're dealing with a traditional bank account and you're a fintech building this experience on top, there's always going to be like a human element in the loop, right? For you to do this kind of final approval. In this case, you can have an agent control a key. You can give them very clear permissions and guardrails. And within those guardrails, you can give them full autonomy, right? Like that is the unlock. For example, you can give agent full control in terms of doing auto sweeps, right? So if you ever have more than X in your treasury account, have an agent move it into rewards every time, right? Or at the end of each month. And so for that, you can give agent full autonomy, because the worst case the agent can do is move funds from your rewards account back to your cash account, right? Like even if it hallucinates or something goes wrong. Because on chain, right, 1,000 nodes that run Solana guarantee on the execution layer that the agent can only do those things, right? And to change those policies, you have to meet consensus of the whole account, right? And so from that perspective, that's a big unlock. And so that is definitely coming. I would say we're very committed to first build out the foundations, though, because we have a lot of operators that want to be able to spend and spin up virtual cards. They will have a lot of operators that are still looking for invoicing. And so we do want to create this foundation first. But we do think, again, like it's coming back to the idea of owning the stack, right? Like from a product perspective, we also want to own as much of the stack as possible, right? And all these kind of workflows, we want deeply and vertically integrated into the single experience. And then on top of that, you can layer on agentic automations and allowing you as an operator to just do a lot less.
One question I have on Altshoot is, who would be the users of Altshoot? Meaning, are these only users who use USDC, other stablecoins on Solana? Like, are you targeting like EVM teams, other blockchain teams?
Yeah, so I would say we are launching multi-chain deposits relatively soon, right? And so from a user perspective, you will not really know that you're on Solana, right? You'll be able to send to any chain, accept from any chain. And I think the way to think about it is like some teams are using, you can use a centralized backend, right? Like I know Turnkey is using AWS Nitro. We are using Solana as our backend, right? And so from that perspective, it will be very agnostic, right? And so today we're seeing a lot of demand from teams that are actually, they don't really care about the chain as much as they care about, like they already have a stablecoin balance and they want proper financial workflows applying to that balance. Because today, the way it works, right, like they probably have multisig and a Mercury account, right? And so for fiat stuff and for like billing or bill pay, they have to go to Mercury, and then some payments they make from stablecoins. With Altitude, we're able to compress that into a single experience, right? So you have and also, by the way, a lot of these teams today, when you have a multisig on Squad, a multisig on Save, an account with Mercury, an account with Brex, you end up doing, your accountant ends up doing manual reconciliation at the end of each month or quarter, right? Because you have to pull the data from all the four places, put it in a spreadsheet, then like do some editing, maybe use Integral as like an intermediate solution, and then you upload it to QuickBooks, and then you can actually do your reporting. With Altitude, like there's a lot of benefits in just running everything there, because your fiat transactions, your crypto transactions are all in the same place, same exports, same syncs. So there's a lot of benefits to that for sure.
So will you be building your own accounting solution, or you would just integrate with those existing subledgers? You just mentioned Integral, like Integral, Trust, Crypto, etc.
Yes, I would say the way we think about it, because we spend a lot of time with CFOs, right, and accountants, and we get two pieces of feedback, right? Like some accountants value greatly the fact that you have these kind of like intermediate solutions where you can upload all your crypto transactions, you can edit them, like Integral we're pretty close with. Awaken is also a great one. So you can upload your transactions in there. That allows you to do this kind of like intermediary editing, and then you actually move it into your books or whatever you're using. Other accountants say to us that we don't want more tools, like we want just everything. We want to just have a clean export straight into QuickBooks, right? And so I guess the answer is, if you do require to use something before you actually upload it to QuickBooks, we'll be fully compatible with whatever the tool of choice you have. But we'll also facilitate clean exports directly into your kind of main system if this is the preference as well. So we'll be agnostic from that perspective. But we're not building our own like accounting software from that perspective. Like definitely, and tax reporting, this is not part of the stack at least right now.
Very exciting. Congrats to the team at Squads. Like, this is fantastic. You mentioned the fact that people won't have to care what blockchain they are on and they can just use Altshoot. I think this is what all finance teams have been like wishing for. I'm looking at the time, Stepan. The title of the episode today was Using Stablecoins in the CFO Stack. As closing thoughts, how would you summarize this episode for the listeners, or if has there been anything that we didn't mention that you'd like to share with the listeners?
I would say stablecoins used to be a pretty niche technology, right? That was used by crypto natives. Today, like with Altitude, is really our quest to prove that they're just a superior technology to do financial operations, no matter if you're in crypto or outside of crypto. And so I just encourage everybody to take a closer look towards the industry. I do think today there is, from an Altitude perspective, we're focusing a lot on just servicing existing demand. Like if you already have stablecoin balances, you come to us. But I think as we progress, right, like this will be abstracted away more and more. And I do think that it's just superior infrastructure to run your company. We actually never had a bank account at Squads. We started the company in 21, and we've been running it on Stablecoins from the very early days. And today, obviously, it feels great because we have a lot more tools and we're obviously dogfooding everything we're building, right, and using it ourselves. So I encourage more accountants listening to this kind of being more open-minded, and I'm happy to give unbiased takes about the industry and like what works and what doesn't. And I'm happy to be transparent about the risks. But I would say there's a lot of great benefits and it's worth looking into.
Thank you, Stepan. There's a last question which I usually like to ask to my guests before they leave is, do you have a favorite quote or maybe a maxim that you live by?
I quite like the expression, anything worth doing is worth overdoing. And so it's kind of like the idea that if it's good for you, there's no limit. It doesn't scale to everything, but I guess it creates this interesting filter that, like in your life, things that you accept into your life, really, if you take them to maximum extent, they should still be net good for you. That's just been an interesting, it's been with me for a couple of years now, and it's an interesting exercise as you go through life.
Thanks for sharing. If people want to learn more about Altitude, I'll be sharing, of course, the link of the website in the show notes. Where should they go? Who should they reach out to? Or if they want to get in touch with you, what's the best way?
So for Altitude, just go to altitude.xyz. We actually have the domain now. And then if you want to learn more or speak to somebody, just DM me on Twitter. It's @Simkin Stepan, and I'll tell you all about it.
Perfect. Thanks a lot for coming in today, Stepan, and we'll be in touch.
Thanks for coming. It's been great.